The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone, and welcome to the Sirius Report Market Wrap-Up for Monday, November 4th, 2024. And yes, it is one day before Election Day here in America. Taking a look at the markets, we do have pretty flat. Everybody's waiting to see what's happening tomorrow. But with that in mind, there's a good chance I wasn't able to do a market wrap-up in the afternoon, though Paul and I will be recording about 3 podcasts to put out subsequently in the week. So I wanted to make sure I got something for you. But with this in mind, let's go ahead and jump right in and just pretty much take a look at what the markets did. There's not a whole lot outside of that. The Dow started out down about 150 points, and then about noon, at least noon Mountains time, it had a major dump that almost within 30 minutes was back up to what the level was and remained flat for the rest of the day. The Dow did end up down 257 points to close out at 41,794, while the S&P 500 was down 16 points at 5712, and the NASDAQ was down just a touch below 60 points at 18,179. In the bond markets, well, a 3-year auction was pretty, you would think substantial, but it was enough to bring the yields down all across the entire yield curve. There was some foreign demand, but these days you can never tell if the foreign demand are actually foreigners or the Fed using its offshore facilities. But either way, the 10-year was down 0.076 to close out with a yield of 4.287. The 20-year, which is well above the highest yield, was down 0.092 to 4.586, and the 2-year was down 0.039 to 4.164. In the dollar markets, dollar was down 38 cents, losing the 104 handle for the entirety of the day, getting at one point to about 103.6. And the DXY against a basket of Western currencies, closing out at 103.90. Meanwhile, gold and silver were about as flat can be. Gold was up 50 cents to close out at 27.37, and silver was up 2 cents at 32.53. In the crypto markets, little bit of a sell-off in the last hour and a half of the 24-hour cycle. Bitcoin ended up being down 2.68%, closing out the trading session at 66,905, while Ethereum was down 3.78% to close out at 23.63. Oil was really the only big winner, with OPEC announcing that they were not going to either do a price hike or a cut. Oil decided that they were going to just, have some buys anyway. WTI was up $2.17, closing out the trading day at 71.66, while Brent crude was up virtually the same amount, $2.18 at 75.28. Meanwhile, some data for the week. Of course, last week was the big one, but after the election, we do have the potential and possibility. Today we have durable goods orders, which we're going to go ahead and factory orders we're going to take a look at here in just a moment. Let's see, on Wednesday or Tuesday, not really anything. Trade balance, well, we already know it's deficit. Wednesday, nothing really. Thursday, we have initial jobless claims. And then on Thursday afternoon, the FOMC rate decision for the midpoint. Now, of course, we know we had the 50 basis point rate cut in last month. And so we're going to go ahead and see if they're going to cut at this point, midpoint. Well, here's the interesting thing. The consensus is they're going to cut a quarter point. The current percent is 4.875 to 5.15%. And the consensus across the board is it will end up being 4.625%, a cut of 25 basis points. we shall see. Anyway, those factory orders, well, yes, they tumbled in September. U.S. factory orders fell 0.5% month over month, which dragged down orders to 1.6% year over year. Core orders rose, but durable goods orders fell 0.7% month over month, and the core durable goods rose better than expected. Now, taking a look as we get to the final phases, nearly the final week of earnings season, let's see what we have anything of significance Monday through Friday. Well, we have Berkshire Hathaway today. I didn't get a chance to see how that shook out, but we do know that Warren Buffett has been dumping his his Bank of America shares by the boatload, going into cash. So trust in banks by Berkshire Hathaway is not really anything of note. Let's see, we've got a few other financials, nothing of win. Well, we'll see how the casinos are going. And then on Tuesday, let's see if there's anything of significance. Nope, not really. Wednesday, we've got some health ones, CVS Health and a few others, but nothing of note. Then we get into a little bit of the mining companies. We got Hecla Mining. On Thursday, we've got Halliburton, Barrick Gold. And let's see, anything really significant stand out? Sony on Friday, and that really is about it. Well, the only real story to talk about is one that's being posed, of course, about the expected deportations that would occur should Donald Trump win the election. Now, just like when Trump went to the New York Economic Club and had a big fight, argument, discussion over tariffs. And the thing about it is when the neoliberal order, and that's an interesting term into itself, but the neoliberal order coming out of World War II was virtual free trade, get rid of tariffs. Tariffs are what caused the Great Depression. Tariffs are what led to World War II, yada, 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 yada. But if you look back in American history, we were built not on income tax of its own citizens, but on a modicum tariff for the rest of the world, and the government was able to easily pay their bills. Unfortunately, the U.S. became the policeman of the world and became the hegemony after World War II, so they needed to increase their budget 1,000-fold. This, of course, led to the failure of the Bretton Woods. It led to the fiat currency system, and it led to the unpayable debt that the Western world has to deal with today. So, just like the standard economic theory is anti-tariff because they really don't understand it, the standard economic theory is anti-gold because they don't understand what money is. They only know what credit is. The same thing can be said about influx of illegal immigrants, especially ones who don't want to become part of the American melting pot. Let's see, should illegals be deported according to a British source? Let's see, what is the comments that I wanted to see? Oh, yeah, who will mow your lawns? Who will pick your vegetables? That is the old hype. But the fact of the matter is of the number of illegals that are in here today, they are not doing those jobs. They are working in the factories. They are working in manufacturing. They are working in construction. They're taking away the jobs of regular citizens and doing it much cheaper, but they're also taking and destroying the budgets of states and the federal government with welfare, with education, with the like. So they're costing more than they're actually offering. And if you want to deal with a problem, you've got to get to the root of the problem. The root of the problem is at the core of everything is the fiat dollar and the credit system. The second thing is the expansion of the government, the expansion or the decline of the purchasing power of the currency, and of course, rising inflation. And to do that, there's going to be some drastic things that are going to need to be done. Two of these things were done in South America or Central America, South and Central America. We know Milei in Argentina pretty much cut the entire government to shreds. There was a short-term hike in inflation, but since he's been in office, inflation has gone down, the budget has been a surplus, and the economy is starting to get better. Well, take a look in El Salvador. El Salvador is actually becoming one of the best places in Central America for business and for tourism. Why? Because they just en masse jailed all of the cartels, the criminals, the gangs, etc. That's the equivalency of getting rid of your detriments to society and allowing the people, the good people who paid the taxes, who had to deal with all that crime, who had to deal with corrupt political offices, you give them the opportunity to flourish, and guess what? Capital comes in. We have built a system that capital doesn't want to come to America. And if you continue to have all this debt and looks like you're going to default on your debt, whether it's treasuries or whatnot, capital and sanctions, using the dollar as a weapon, nobody's going to want to invest. And because you have to print so much just to get a dollar or two of GDP growth, well, that's credit expansion. That's not actual manufacturing or industrial expansion. Anyway, that's my 2 cents on the theory. We shall see if that comes to pass. But other than that, I want to thank everybody as always for being a part of the Sirius Report community and for getting your market wrap up for, today's Monday, November 4th, 2024. Don't forget to subscribe, like, share, comment. Send this out to anybody you think would be significant. And like I said, Paul and I will be getting back together tomorrow to do some recording on some interesting stuff. We got some thoughts and ideas. And don't forget, if you choose to, don't forget to vote for whomever candidates you want, for whatever initiatives you want. And until the next time we get together, have a great Monday.